you look at systems that are strictly based off just the moon's phases, and you see a system that's trading Google and it's outperforming most average traders in the globe. And I'm going, might be a little something to that. And then you really get into it, and then you see the people who are masters at this, and then you see the algorithms behind it. And you're like, okay, I'm sold. And I am. Like, I didn't, but you can't argue with systems that get results. And then you look how it's being put together, and you really can't argue. I mean, we can, but what's the point? No different than policemen and first responders or nurses or whatever will tell you the full moon effect. It does impact our tides. We know this. It also impacts behavior. We know this. Well, what is the market? A bunch of people. Well, Scott, it's algorithms. Yes, but somebody programmed that. And so there's a lot of validity to it, guys. I know it sounds wonky. I'm not here to preach it or really teach it to you, but I am trying to make you aware it's there. And I've seen systems that are based off, like I'm telling you about the 4th, that they will use that date. Well, now the 5th, technically, they'll use that as a reason to buy or sell around that position specifically because of that key date. So just food for thought, especially with the collider about to open up and all that. Again, just lots of little craziness going on, but it does just fit with everything else that's been crazy lately. So I hope that's helpful.
It was, and it was a great place to go live on YouTube. I did that while you're talking, Scott. So those who are joining us through YouTube are wondering, what the heck is he talking about, a collider? And that's why you should have participated in group coaching an hour ago, because you're not going to know about the collider. But anyway, it's good to be back with our YouTube family. Thank you guys for your grace last week. My little guy was doing a American Ninja Warrior camp, and actually several of the ninjas, if you watch that show on TV or Hulu or wherever, they were there, and they were doing a demonstration on the last day of camp, and Zeke really wanted me to come and watch him compete and watch it all, and it really was a great time, but it was right in the middle of the YouTube show. So thank you, Chris and Scott, for managing the YouTube channel and the YouTube show while I was out, and we're back. This week, I'm overcoming some kind of summer cold. I'm feeling better and better as the day goes on. I'm actually doing okay right now. But we had prepared for Scott to carry the bulk of this conversation, and the topic at hand for today, which we always stick to so closely. The topic at hand is we're going into the halftime of 2022, and there's an opportunity to review the last 6 months and take a look at what happened both in the market and in our trading accounts. And then there's an opportunity to preview the next 6 months and design our system and strategy to achieve the outcomes that we want. So, Scott, that's your runway. That's your introduction. Why don't you kick us off here? And Chris and I will interject as we believe that you say wrong or false things, and we need to feel the need to correct you.
Thank you. Hey, guys. All right. Great. I love the introductions.
People are going to take that way too seriously. Like, now, see, they're going to listen more intently because they're wondering, like, what is he going to say that's wrong or false? Did y'all know you can't believe everything that's on the internet, though? Abraham Lincoln said that. You really got to be careful.
Josh, you're killing me, buddy. So let's so in the traction group, which we relaunch tomorrow for the next quarter, right? I've asked all of them this week. I said, look, I need you to take an honest, just be honest with yourselves for a minute. How has the past 6 months gone for you since, the beginning of January? Where are you now? Go back and look at your trading, look at your win-loss, look at your journal, look at your quarter jars I teach in traction, right? Wake up for a second. What's the market doing? Well, we know it's in a bear market, guys, right? We can see that. We know we've sold off. Are you so used to buy and hold or just keep buying the dip and it bails you out? We can see that has transitioned. We know it through counter ranges it's transitioned. We saw that set up in January. And you can see where it struggled since then. Now, where do you think you are versus where you thought you'd be? So when I deal with a fund and we're building up systems, I have what I consider to be error checking. And what that looks like is if I came into the chart and I said, okay, theoretically, this is the trajectory we want to get the growth. Okay, nothing works like this. We know that. If I come on top of that and I were to come in and start to play with this a little bit. And all of a sudden, our performance is like that at that point on the axis. Well, clearly those two things don't match up. And it's very simple. I'm comparing 2 points, just like we do when we're doing charting analysis. The question is, are you where you thought you'd be right now? If you're not, then what tools does TSU have? What coaching, education can we do to help you get there? Okay, to help change that trajectory, so it does look more in alignment with maybe something closer to this, on par with what you want. And this is a very crude way of showing this, but that's the idea. So where are you now? Are you happy with your performance? Where do you think you'll be? Realize as we go in to set up the July calendar ranges, which will take from July 1 to July 15 to build, because you need 10 days to build these. I understand for the next 6 months, they're building, they're going to establish the range in the next 2 weeks. They're going to set that range starting tomorrow through the 15th. And that range will be there for the next 5.5 months after that. Do you think we're going to go higher from there or lower from there? If we went higher, where would you look for? Midway from the middle of the year, from January to down to July 1? Is that where you think we're going to go? Do you think we're stall up out in here? Or do you think we're going to continue to extend and the market's going to keep falling apart? The reason I tell you this is because I deal with people who are already planning positions around what they think we're going to be in the next 90 days to 180 days, or in some cases, the next 2 years, believe it or not. And they are positioning accordingly, or they're building positions. They don't come at the very bottom, say, ding, 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 put me in. They can't. They don't want to move markets. They don't want to manipulate, but they do start buying on the way down, or they might be selling all the rallies thinking we've got another 20% of the downside. It all depends on what markets they're in. Do they think that's a bull market, a bear market? Everything's not in a bear market right now. Commodities are not. Okay. So I'm trying, when I asked Josh and Chris if we could do this today, was a few days ago, and I don't normally ask that early in the week. But the same things I'm asking them to let's do today are the same things I'm teaching people in traction in order to get you traction. Because if the institutions are going to set the range, now we have like an opening range, we have a high and a low, and we can start to deal with that. And if stocks are staying below that 10-day range, well, then they're still in risk off mode as opposed to risk on. So think of above here as risk on, below here is risk off. Does that mean they're selling? Not necessarily. They just might not be buying. Okay. So the fact somebody says risk off doesn't mean somebody's necessarily selling at that point. They just might be staying on the sidelines. Remember, there's buyers, sellers, and riders. So you're either buying, you're selling, you're in a position, or you have no position clearly. I think it's obvious. So those are your 4 states, right? So the question is, in the next 90 days, the next quarter, where is your performance now? Where do you want to be? Take an honest assessment. I'm not coming to your house in Virginia or up in Tennessee to see Josh or anybody like that to go say, well, let me see your portfolio and what you did. Just take an hour out of, between now and the close tomorrow, if you've got that time, and be honest with yourself about your performance. What did you not do well? What should you do better? If you don't set a target, guys, you don't have a goal, you will not achieve it. If you know anybody who typically trains for, like I've got a near and dear friend in my life right now who has decided in their 40s that they want to do a 10K trail run. And there's one on November 15th, 17th, somewhere in the middle of November. They've already been building their stamina and all that. But after we had a conversation, actually this week, they're like, I'm going to go do it. And I said, what? And they said, I'm going to take your advice. I'm going to go do a 10K. And I'm like, oh, somebody shoot me. But it's a trail run, not 10K on pavement, on trails. And they're starting to prepare for it and really gear up for it. They got what is that? How many months down the road, right? A good 4.5, 5 months prepare, whatever it is, until they get to go do this. And so they're going to make it happen. I'm challenging you. Where's your account now? Where do you think you can realistically be in 90 days, 30 days, 60, 90, 180 days out? And we're in a bear market. If you don't plan it, is my point. If you don't set a date on a calendar and stick to it, you won't hit it. There's always some other reason. If you guys could see the back of my shirt, I don't know if you can or can't, but it says Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. There is no someday. There's not someday. It's not on the days of the week. So I didn't actually wear this because this day I just hit me in the head. What is the day of the week you want to focus on to do something? What date on the calendar? Be honest, take a deep assessment of where you are and where you want to be. And TSU has all the tools you need to solve these problems. The question is, where are you weak? And if you won't assess where you are, then how do you know where you are and where you're trying to go? If Josh is in Tennessee and I'm in Birmingham right now, we want to meet, we meet in Huntsville. We know where Huntsville is. We have a spot set, hey, let's meet at this restaurant at this time on this date. Tomorrow we start traction. It's specified. It starts the Q3. We start brand new traction group. Same thing here. But what I see with a lot of traders is there's this, well, I'll get to it later. No, set a goal and let's go after it. Worst thing you're going to do is miss your goal, but at least you tried. Better try and fail than never try. You miss what is 100% of shots you never take. You got to have some logic, and we can delve in this a little deeper. But I'm a lot of people are really struggling in the marketplace with this decline, and now they're like, "How do I dig out of this? Are you still trading the way you've always traded? Did you always just buy and hope?" Not, Josh brings up in group coaching all the time. The market conditions we're in, he said this for the past, month? I think I've heard you say this, at least that I can think of, almost every time. We are not in the same market conditions you were 12 months ago. Mm-hmm. Right? I mean, Chris, Josh, y'all jump in here. I hope that's helpful, but I'm trying to give you guys a reason to think ahead, because I assure all of you, the institutions are about to set these ranges. I have hounded the traction group for all week on this, and there's going to be some really good moves coming up in the next 2 weeks, guys. They got to build the ranges, and if they consolidate and they don't break out, then it'll look like this down the road. This is US Steel. I know, because I traded this one out of this beautiful 6-month range. Took about 4 months. Ding, 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 ding. But if they leave them consolidated in there, wonderful. But this is not uncommon to see moves that you go from 16 to 24. Well, what about you? But that's a pretty good move in 10 days. Okay, that's the kind of behavior, because the institutions are setting, and it's in every market in the world. It won't just be the United States. This is going to be over in the UK. So if you're outside the US, your market's going to do similar things. It'll happen in the currencies. It'll happen in the futures markets. It'll happen in crude oil. So I'm trying to set you guys up for success and telling you, and I appreciate Josh let me teach counter ranges to the level we have. The difference is the traction group can time into this starting literally tomorrow with the pivot structures we use. But this is coming, and they're going to set it, and you don't have to trade tomorrow, but where do you want to be in 6 months? That's my challenge to you, especially if you've not had the best year of your career. And this is a great trading market. So I think it's great trading time, but it's not buy and hold as most of you are used to for over a decade now. So Chris, Josh, y'all please jump in here. But like I said, I want to put that in there. If y'all need to share screen, let me know.
Yeah, one of the things that you were talking about before about, the 4 different ways that you can be positioned, not necessarily just buying or selling, reminded me of something that I think is probably good to share and remind people of here, which is that, like, in order for market or stock or whatever to go up, you have to have more buyers than sellers, right? But there doesn't have to be more selling for the market to go down. There just has to be a lack of buying, right? So if people are standing on the sidelines, the market maker is going to keep dropping the price down until people start buying.
That's a very interesting point. I've never considered it that way, but you're 100% right.
Yep. People mess up.
Inaction is bearish. People just sitting there. And y'all, look, it's a challenging market to trade. It's not an easy well, I think I said this last time we were together. I spoke about it in terms of the recession, but the same is true for this bearish market. Bearish markets don't destroy trading accounts, just like recessions don't put companies out of business. They expose the weaknesses in your system. Anybody can make money when everything's going up. You just buy the stock, sell covered calls against it, collect the dividends, all the fancy strategies. My son Fibonacci strategy, brilliant, by the way. I mean, it's easy, and I mean that humbly, because I know some of you are still figuring that out, and that's okay. There's an education that has to happen, but when you get into this environment, it's tricky. I'm about to go on about a 15-minute tangent here, so if somebody's got something they want to say, but Scott, you teed up a thought too well for me to miss it. So go ahead.
Or you do. I want to bring it up because when you came back to what I was saying, Chris, we're echoing. You just sold your house. Okay. You just told me you're seeing price adjustments. Does that mean that there was an increase of sellers? No. Right. So my point for everybody is the same logic. It doesn't mean there's more sellers. People are just standing on the sideline right now and letting price come into a point of value. So you don't have to have, that's why I give you guys these 4 conditional states. It's true in other areas of the market. And I don't want you guys to lose sight of that because, they're selling. No, they're just not stepping up to buy. What increased the price of your home from when you bought it to where you sold it from?
Magic.
I love it. A lack of supply, growth, people needing homes, whatever. There was a demand. Right now, the fact that there may be less demand doesn't mean there's more sellers. The same thing's true in the equity markets. This is a reflection of business, guys. And I know how we all get wired, but I couldn't miss that. So Josh, please dig in now. Go where you're going to go. I just didn't want to leave that out.
My magic comment's not as funny out of context. And I can't even tell you to go watch this video because I had seen it like 10 years ago, maybe not that long, 5 years ago. And I forgot there was a couple of really bad words in it, like the bad words. And we were talking about this in the family, and the crux of the video is there's all these people in Southwest Plane, and they go through the spiel like you got to turn off your phone, turn off all your electronics and stuff, and then somebody raises their hand like, if you don't mind me asking, like I understand turning off my phone because the radios and everything, but what is turning off my iPod shuffle or whatever? He tells you how old the commercial was, or not commercial, but the spoof. And so then they keep coming up with these excuses, and finally the steward or stewardess gets exasperated at these people asking these somewhat obvious questions. And she's like, look, people, we don't really know why the airplane flies, and we're afraid your devices are going to mess up the magic. Don't break the magic. Like, just turn off your dang phone. Like, well, one time I forgot to turn off my phone, but we didn't crash. And they're like, don't break the magic. So that's why when Scott says what made the price of the house go up, like, we don't really know. It's just magic. I mean, we do know. So anyway, so Scott, I had not intended to go here. In fact, I intended to talk very little, but they'll both laugh because I feel like it's a issue I have with talking. Scott teed this up too well. I'm going to rip through this content. This is found, this is a piece of one of our Foundations of Trading Level 2 courses, but it is great timing. In fact, we should probably do this as a masterclass as I'm innovating here off the top of my head. It's a great time of the year to just sit back and analyze what has happened and what's going to happen. A lot of people that are in our circle of stock trading and entrepreneurship and all that have a book sitting on your shelf that you haven't read in a while. It's called Think and Grow Rich. Not place a bunch of trades and go rich, not go find a new strategy and get rich, not go and get rich, right? Think and Grow Rich. It's the name of the flipping book, people. And so carving out opportunities for thinking time to analyze what has happened compared to what we thought was going to happen, compared to what we want to have happen, right? That's an amazing exercise to go through. And one of the ways that we break this down into a framework, we call it the circle of progress. Again, just ripping through this, but this is a circle of progress. You start off with a goal. This is where I want to be. In the next 6 months, I want to double my account. By the way, you want a strategy to double your account? Do 2%, a 2% R, get 2R twice a week. For the next 26 weeks, you'll more than double your account. Like, that's an actual strategy to get to where you want to go, not just, I'm going to double my account. So to create breakthrough, you've got to see things as they really are. Be honest about what has happened. Then envision a better reality. That's vision. And then make it the way you see it. That's system, strategies, and structure. The circle of progress, beginning with a goal, should have, and as we're a Trade Smart University, we have SMART goals, which are specific, measurable, attainable, relevant, and time-bound. Here's an example of what that looks like. I trade the stock market to generate $2,000 in monthly bonus cash for my family. Half to pay down debt and half to enjoy now. Is it specific? Yes. $2,000 monthly. Is it measurable? Yes. I did or did not create $2,000. Is it attainable? Yes. For the size of the account from this statement, we're going to assume it was attainable. Is it relevant? Yes. I'm using half of it to enjoy. I'm using half of it to pay down debt, which just skyrocketed on me. And is it time bound? Yes, every single month I either did or did not achieve this goal. If you want to steal that, go for it. Change the numbers in the timeline, but that's not a terrible place to start. Success leaves clues, so go ahead and model what people have done before you. Then we move into a plan. Plan should include questions or answers to questions like, what's your step-by-step process? What are your rules for trading? What are the things you'll always do? What are the things that you'll never do? And what strategies do you trade? By the way, the strategy that you traded 12 months ago is not the strategy that's going to put cash in your jeans today. It's got to be a different strategy. I think we had one morning glory that triggered this week, and I was at my daughter's foot surgery. I wasn't even there for it, or something else I was doing. But the morning glory is not a great strategy right now. Does it mean it's obsolete forever? No, it'll come back, but it might be a little while. Other questions. What's your risk tolerance? How are you going to manage your risk? What's the measure of real success? I'm not going to go through all these again. This is live on YouTube. So you guys, whoops, I went too fast. I didn't mean to go that fast. Y'all really need to come through Foundations of Trading to get it. But, pause the video, take a screenshot here if you're live on Zoom. This is part of my personal process, which is always growing and improving as I go. Here's some of my global rules. I talk about this a little bit in Trader Conditioning Bootcamp, by the way. I need to reteach that class too. That's an oldie but a goodie. Okay, take a screenshot of that. All right, I always trade with the direction of the securities trend. Right now, that be down for most securities. I only select trades with a qualified trade setup. By the way, if you can't write your qualified trade setup on the back of a napkin, it's way too complicated. Here's some of my thoughts on risk. It's the most important thing. I use the R system of trading. I mean, I can't stress the R's enough to you guys. I was just talking to Jen, my wife, about this yesterday. Early on in my trading career, I had a strategy that could be likened to go big or go broke. And the problem is there was just enough times that I went big that it was addicting, but the go broke always happened. And when you go broke, you're broke. You don't recover from broke. So the R system of trading completely changed that in my life, completely changed the get rich and go broke cycle. And I can't endorse it strongly enough. It's amazing. Again, I don't want to camp out on all these, but here's some of my definitions of success. Screenshot or pause and write it down. Those are great pieces to model and great questions to answer on your own. So once you've got your goal, once you've got your plan, this is all forward looking, then we need to execute. Take disciplined action, follow your plan, and avoid the ready, aim scenario. We call that analysis paralysis. Then measuring. And so this is kind of where Scott came. Like, you can't measure if you don't track. There's a saying out there, what gets measured gets managed, and what gets managed gets done. If you cannot describe in your own way how your trading's going, like let's say we met at a live event here in Nashville, and who's here live? Sorties is here live. I know she is, or Tom is here. Said, hey, Sorties, how's your trading going? If you can't tell me how your trading's going specifically, not, it's going pretty good. Like, no, like, how's your trading going? Like, well, I'm at a 75% win-loss ratio. I'm averaging 30% of my winning trades. I'm limiting my losses to 15% of my losing trades. And really, I don't have any overhead because I'm just trading stock right now. Or, my win-loss ratio is exceeding my expectations. I'm averaging 1.5 R per week. And on this pace, I expect that my account's going to double by the end of the year. Okay. Different ways of saying it, but very, very specific measurements that are being taken. And you're going to see why that's important here in just a second. There's something that I call the 4 levers of profitability. Take all the fancy stuff, all the genius that's in Scott's brain and all the genius that's in Chris's brain and all the genius. And I promise you, it boils down to 4 things you can do to make more money. You can have more winning trades, increase your winning trades. You can increase the money you're making on your winning trades. You can decrease the losses on your losing trades, and you can lower your overhead. And don't discount that last one. So the public TSU trading account, which is small, temporary spoiler alert here. We have 2 accounts that we're going to be launching for public consumption in the next few months that are not small, because I know some of you guys are trading 5 and 6 figure accounts, and we want to be able to model and demonstrate inside of those as well. So we're going to actually have 2 accounts, one that's small that we're trading from 1,000 to 1 million, just because we think that would be a cool story. But then we'll have one that's more realistic of where a lot of you are. But in our current public TSU account, which is just coming up on 3,000, which is pretty cool, coming up on tripling, margin fees are legit and option fees are legit. And so rather than shorting SPY, as I did earlier this week, just close it out for just under 1.75 R, I traded an inverse ETF to avoid the margin charges. That's overhead. Is it a lot? No. But does it add up? Yeah. Right. So be smart. 4 levers of profitability: increase your win-loss ratio, make more on winning trades, lose less on losing trades, and lower your overhead. And this is why that's important. You need some version of this for yourself. It may look different depending on your strategy, but the elements need to be in there. So let's say we take 16 trades in a given period of time. We'll say this is a 1-month measurement. Side note, you should write this down. There's a saying, if you want to have a good week, you should measure daily. If you want to have a good month, you should measure weekly. And if you want to have a good quarter, you should measure monthly, because while you may have a bad day, measure daily, you'll probably avoid having a bad week. Or if you measure weekly, you may have a bad week, but you'll save the month. So let's say this is the monthly measurement. 16 trades, the average value per trade is $1,000. You've got 11 winners and 5 losers. So it's a 69% win-loss ratio. On your winning trades, you're putting 18% or just under $2,000 cash in your jeans. And on your losing trades, you're losing 30%, which is $1,500 cash out of your jeans. And you're, for some reason, paying commissions at $6 per trade. I think this is an older slide deck that I pulled up. Could be options, I suppose. You could be paying commissions on options. Or you're trading overseas. God love my overseas traders, because y'all still get commissions. So at the end of the month, right, you put 2.4% ROI, return on investment, $384 cash in your jeans. Like, you're making money, right? It's easy to feel good. But what if we changed a few things? What if you took one less trade? You had a better system. You joined Trader Traction with Scott. Dude's a genius, by the way. Coffee and cash is worth its weight in gold. So you're optimizing. You're taking one less trade. You're still doing $1,000 per trade because you're right sizing your positions. You're going to increase your win-loss ratio by 4%. You're targeting 73%, which is a very reasonable target. Your loss ratio is going to go down proportionally. On your winning trades, you want to move the needle up to 14% on your winning trades, and you want to change the losses to 25%, limit them to 25% of the investment. And then we're going to keep your commissions the same, just so the math is easy. This is what would happen. You would take 15 trades. Your average trade value is $1,000. You'd still have 11 wins at 73%, but you got rid of one of the loser trades. On the winning trades, you optimize to 24%, like we said, for $2,640. And your losing trades are $1,000 or $1,000 cash out of your jeans, or 25% limited loss. And in this particular case, that's total, by the way. These are sums: $2,640 came into your jeans, $1,000 left your jeans, and you still paid $96 commission. But look at what happens. The difference between these two: instead of $384 cash in your jeans, there's $1,544 cash in your jeans for a 10.29% ROI. This is actual cash money. Now, if I would have started this off and said, as you saw the slide, how many of y'all want to triple your results in the next quarter? Everybody'd raise their hand, or they'd leave because they thought it was a scam. But you can see here, making incremental improvements, 2, 3, 4% improvements, has a exponential impact on your results. And if we said, how many want to make $1,500 in a month versus $300 in a month, or $1,544 versus $384, right? Everybody would sign up for that class. And the reason that I bring that up is because what's easy to do is easy to miss as well. How many of y'all would even pay attention if you had one more losing trade? The effect of that on your account is catastrophic. Start stringing those together, and you go from doubling your account in a year to making marginal progress, burning out, and quitting. So this is my last slide. I'll wrap up with this one. Small adjustments will add up to big changes. And Scott, the way you set that up at the beginning was just too perfect not to go into that. The 4 levers of profitability. I would encourage you guys to spend some time thinking about that and designing what it is you're going to do. Or maybe you're happy with where everything is at. You still need to measure it to make sure you're not slipping. End of rant.
Chris, you want to add into this?
I think Josh pretty much just hit the nail on the head.
I want to bring up one thing, and I've talked about this through the Traction Group. So Josh just walked you through a really good example of small changes and big results. So true story about me, this has been a long time. Let's go back like .com type days. I analyzed, and I would suggest if you're an active trader, it doesn't matter what time frame you're on. I had a day trade system I was running, and Traction Group's already heard this a dozen times probably. At 53 minutes, so 23 minutes after the opening bell, I'm Central Time. So at 8:53, I took my first 30 minutes and I broke it down to 5-minute intervals. And I looked at my win-loss ratio from 23 minutes after the open, so 8:53 my time until 9 p.m. Every single trade I took with that system, goose egg, I lost every single one of them. And then you look at the amount of money you're giving back. That one slight change was huge difference, the bottom line. Was it a bad system? No, it wasn't a bad system because it's crushing up until 23 minutes. So either once you understand the data, because you've measured it, now you can either fix it or you can stay away from it by just getting rid of those losses, not pursuing or saying, I need to tweak for this. But in that first 23 minutes, boom, 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 raking. The difference is I was taking all that gain. I wasn't getting it all back, but it made a significant double-digit percentage return difference. And that's what Josh just walked you through. But if you don't take the time to break down, and if some of you are really good quants, I get that. I mean, stories, I know you have the mathematical mind for this. Some people don't. Keep it simple, guys. But at least say, okay, win, loss, what time of day, what time of the month, what quarter. You're going to find one more example of this. I had a swing system. I will never launch it in May, June, or July. I had a client. I said, please don't do it here. It's going to work against you. And because of time constraints, I won't go through this. I'll save it for some other time. But I share this with you because it was 3 consecutive months of losing. The 4th month after that, it made up the prior 9 days worth of losses combined and some profit. And the system was already profitable at that point very nicely. But there was one point, I think it was 12 losers in a row. System still works great. Still would work today if somebody was, as I could, not for fun. But my point with you is, does that mean because I took one trade, I had a loser, I quit? You need 100 trades for a good sample size. And that's like a minimum standard. But it's amazing once you start to measure the data, and I did. There's 4 seasons in the world we live in globally. The market has its seasons. We're in summertime, and for the first 6 months, it's felt like winter. That will eventually change. The buyers will start to step back in at some point in an appreciable way because they see fair value in the market, or value, whatever you want to call it. The only thing you got to decide is, are you being patient to wait for it to come to you? I guess it's more my point. But as Josh did an eloquent job of displaying for you, if you're not going to take the time to measure, then how can you change what you can't measure? If you've ever tried to lose weight, do your clothes feel tight or they feel loose? Or can you feel that you're gaining some weight? Do you feel winded walking upstairs? Do you need to exercise more? Like, there's simple ways you can see that. But with trading, it's a little less tangible because there's always another trade around the corner. You've got to take stock of where you are. And the whole point of today's presentation was like, where have you been in the past 6 months? Are you happy? Is your system performing? If it's not, what do we change, or do you need a different system? And TSU can help you. But where you think things will be in the next 6 months, because the institutions are going to be coming after this to set the ranges for the next 6 months, and it starts tomorrow. And so if they're going to set the range, there's short-term opportunities and longer-term opportunities. Where do you fit within that? But more importantly, at this moment in this conversation, are you where you thought you'd be starting January 1 to July 1? And if you're not, and you will take an hour or two of your, between now and this long weekend ahead of us, and happy 4th of July, everybody, by the way, you'll take a minute and just go back and look at what you've done. What won't you do again, as Josh says in the slides? What will you never do again? What have you done repeatedly you shouldn't do? And then if you need help, reach out to TSU. My point is, you've got to measure. And if you don't measure, you can't change what you don't measure. In order to solve a problem, you got to first admit you got a problem. And nobody's going to beat you up. All traders go through this. But you take an honest assessment of where you are, and then let's try to help you get where you want to get to go. Okay? Does that help everybody, I hope?
Yeah, I think one of the main, maybe not main, but a big issue with retail traders is they just don't track enough. Like if you work with professional guys, you'll notice they track everything, so anytime they need to look something up, if they need to find out the statistics on something, they have the data because they've been tracking it. And I think as retail traders, we kind of just get lazy and we just take our trades and then we look to see whether our account went up or down, and that's just not going to cut it.
I agree 100% with that. And, take the next right step. For some of you, well, if you don't know what ARS trading is, you need to get educated on that. Please get educated on it. But what if you just started tracking your Rs? Here's how many Rs I made this week. Here's how many Rs I lost this week. And then Alfonso talks about unforced errors. That's where you did something that was against what your plan is and it cost you. Sometimes unforced errors can be a gain as well. That's a whole deeper, I'm going to hold off on going there. The other thing that Scott mentioned is it is an exceptionally well-disciplined mind that can analyze something you're doing and imagine that it's maybe not the best way to do it. Because if you actually believed it wasn't the best way to be doing it, you would be pursuing a better way to be doing it, right? And so it's kind of this way. Let's take it out of stock trading. Let's put it into personalities. When Scott calls me a meanie face and hurts my feelings, I can't ask the question, why did he do that? It's the most disempowering question you can ask in an interpersonal relationship. Why did they say that? You're never going to answer it because you don't have their model of the world. You don't have their experiences. You don't have the same things that led to them saying that thing. And so asking yourself this why devolves into a vicious loop that will never solve. Because if you knew the answer why, right, then you could have avoided the conflict to begin with. And the same thing is true in trading. You're almost asking yourself the question, why? Like, why am I not doing better? Well, your brain says subconsciously, hey, idiot, if I knew why I wasn't doing better, we'd be doing better. So it really, it takes a well-disciplined thinking mind that looks at the situation and says, here's the data. I first believe that there's an opportunity to do better. How might I go and achieve that? That's an empowering question. Y'all should write that down. How might I? And then your brain is going to say, I don't know. If I did know, I would have done it. You say, okay. But if you did know, how would you do it? And when I do private coaching with students, that's a question that unlocks a lot of things. And it's so funny because they don't realize what you're doing. Now it's out there in the world. My secrets are out. It sounds so stupid when you look at it specifically. But if you did know, I'm telling you, just try it. Those of you that have kids and your kids are frustrated about a homework assignment, I do this with them too. They're like, I don't know how to do that, Dad. Like, okay, I understand. But if you did know, like what might you think the answer would be? And it just gives their brain a chance to like unlock this new dimension and go there. And I know we're kind of going metaphysical here and woo. But there's value in thinking time, value in seeing the situation as it is, and value in imagining a better situation.
Josh, he just touched on a point. I'm gonna make 2 points about New Year's Eve in just a second here for a minute. Before I get there, I've spent more time in the previous 3 months on Traction talking about more psychology than I normally would. And it's one, because of talking to different people throughout the industry and seeing major funds get hammered in a lot of ways. And so I share that with everybody for a reason here. I don't want you losing sight of that, because a lot of people who haven't been trading that long, especially on the pandemic group, this can be quite brutal emotionally on people. They thought they had it figured out. They don't. The reason that I appreciate Josh, let me do Traction quarter to quarter, is to walk you through 4 seasons of what happens. And we get to start that again tomorrow, which will be fun because we go through Q3, and that takes us into September, October transition right there on that Q3, Q4. And what are the pros doing with their money? So that's exciting. But now let me shift from that and go to this. If you ever heard this, what happens on December 31 of this year? It'll be a brand new year, right? New Year's Eve, all the revelry up in New York and watching Times Square and watching the ball drop from home, wherever you are. Maybe you're on a lake somewhere watching something, right? Why is it that everybody waits to do the New Year's resolution? And the statistics tend to bear out within 21 days that
you were going to say revolution, weren't you?
No.
You're trying to stir the pot, Scott. Don't stir the pot.
Seriously, why do you wait till New Year's Eve to make a change? It's an arbitrary date, is it not? Why can't you do it now? You decide you want to go get fit, go get fit. You want to change the way your body looks, go change. Like whatever it is, you haven't cleaned a closet for 3 years. Your wife's been begging you to, guys. You got a long weekend ahead. The market's closed Monday. You're like, Scott, stop. I don't want my wife to hear you right now. But when you cleanse, you feel better. When you cleanse clutter, how many of you ever felt better after that? When you make a decision and you take an actual step, people are like, man, this isn't trading. The funny thing is, the people I have that I would let trade my money today that I've coached over the past 20 years, still to this day, I'd let them trade my money, are people that I still work with on a rare occasion, usually once a year, to touch base on things. I'm not teaching them new skills. Their whole conversation is their portfolio's performance that we measure, as Chris has just brought up to all of you. The pros understand this. Everything they have is data-driven. The other part of that's the psychology. And most people I've worked with, what you'll find is it's the between here, that 6 to 8 between your ears, your brain right here, that really is what kills most traders. That's when people are getting hurt right now. That's why I tell you, and you heard Josh say it, I say it in Traction all the time, what's your entry, what's your stop, and what your targets? What are your R's? And if you're not trading to targets, you're trading for R's, what are you doing? Buying and praying, buying and hoping. And I understand, I'm having this conversation with people inside and outside of TSU. I'm seeing it with professionals who have portfolios they're managing, have with individual independent traders. And all of a sudden, the market wasn't keep buying the dip. Now you got stocks down and the NASDAQ down between 40 and 90% in some cases. And people are panicked. Did you think it goes to the moon? Trees don't grow the sky. I'm not being critical, but what is stopping you from taking an actual step, whether it's starting Traction tomorrow with me? Is it getting with Josh on, group coaching? Whatever it is, it's going on. What's stopping you from getting a personal trainer to get yourself healthy? So by you get to the end of a year and 180 days from now, whatever it is, 6 months, you're at a goal. And getting the right coaching or the tools, whatever it is, even if it's not trading related, I don't understand why people, especially when you go to your phone and that's thing called Google, you can type it and you can find resources. You can find a personal trainer. Whatever it is, you need help for your grandparents, your parents, somebody help you with your kids, whatever it is. I know I'm rambling through this to some degree, but I'm always amazed. I got, my 2 arms, 2 legs. I clearly have maybe somewhat of a brain, not according to Josh. I got fingers and toes. I'm healthy. Brain. I'm breathing. And what's stopping you? Nothing except the thought in your head. That's it. And so whether it's through this or anything else, but don't just sit here idly by, arms folded, and say, show me how to trade. I'll show you how to trade all day long. I'll teach you all sorts of things. The only thing is, are you going to have the mental with the bandwidth to go do the same thing over and over in the face of difficult times. What's the saying? That during good times, weak men are made, and difficult times, strong men are made. Okay. If you ever heard this quote, right? And it boils back to, yes, I want a better life for my kids than I technically had, right? I want to leave generational wealth for my children and my grandkids and great, great, great grandkids and all that, right? But in order to do that, I have to break ground or create something that can. If I want to show that I am healthy and I have a swimmer's body and I love to swim, then I do those things allow me to do whatever I want to do, whether it's swimming, exercising, running, eat better, eat healthy, eat clean, whatever it is you want to do. But don't sit here and not realize this is your New Year's Eve in this conversation where you can take control of your life. And I see this with people. Unfortunately, their trading is struggling. You know what's struggling around them? I always talked about this. You need your mental, physical, spiritual, emotional health. If you're not spending as much time in your religious faith as you want to be, what's stopping you this Sunday? Whatever it is that's going in your life, because it resonates in the charts. And people don't believe that until they say, you know how I said I need to plan better about trying to take care of my elderly parents and I didn't, Scott, and I'm trying to be a day trader and then mom needs me and I can't day trade. Well, now I can't make the money. Well, did you plan for it? Well, I can't really trade that time of day. Then why are you trying to be a day trader? Because I got to make money now. But if it doesn't fit with your lifestyle, why are you trying to do something that you know time doesn't allow to do? Then you're frustrated. Now you're angry. Now you're mad. Now you're mad at the world. You see the cycle, guys? So rather than sit back and wait for December 31 or January 1 to make your New Year's resolution that you're not going to follow through, make a choice today, regardless of what it's related to in your life, that you need to change. Just one thing, not 30. You won't do 30. Pick one thing. Is it something with TSU you need to do? Do it. Is it with your trading on your own? Do it. If it's your health, your fitness, whatever, just go do it. I'm not here to be a motivational person, but I am seeing people who I'm watching as the market gets hard on them, they're letting go of other things that matter to them. And then they wonder why it becomes a spiral like down the commode. And then they're like frustrated by it all. And they're like, how do I fix this? One step at a time. How do you climb a mountain? One step at a time. How do you come down the mountain? One step at a time. You can't do it all at once. That's why traction is built out of a time frame that it is. And then Josh has material and Chris that it's not just a one-off event. Okay. Regardless of what you change, commit to yourself today. One thing, maybe it's to clean up the closet, the little coat closet you haven't touched. What's stopping you? It'll take you 30 minutes. Oh, it'll take hours. You don't understand. Excuse, excuse, excuse. Anyway, there's my 2 cents. I hope that's helpful for some of you. But if you're struggling, measure the past 6 months, set a goal. Where do you want to be? It doesn't have to be a dollar sign. It can be something to say, I want to win 67.2% of my trades. Okay, well, do you have a system that does that? Not really. Okay, well, what do you have? Well, I have these 5 components.
They should come see me.
They should go see Josh. Yeah.
Me and WD Gann, dude.
What is it?
I coached under him. He was my mentor.
Killing me today.
That would make me like 100 years old for those
that don't get it. I know. That's why I'm so tickled by it. I hope this is helpful. Just make a decision, commit to something, and follow through. The same thing with your trading. I mean, Chris, Josh, jump in, please. There's too much opportunity in front of you.
It's so good. I do want to hear from Chris, but we have a saying in our family, this could be spiritual or it could be practical. Just do the next right thing. You might not have the whole picture, but just do the next right thing. And you will be surprised at 2 things. One, if you do the next right thing enough times, you'll end up doing the right thing. And number 2, it's a great way to get unstuck. Last but not least, and this really, I mean, I don't feel like it has, we didn't set off for this to be a promo. It's not a promo. It's just well-timed and it's on our minds. But the best way to get outside of yourself is to find a peer group or a coach. You remember that problem we were just talking about where it's hard to analyze something that you're doing and imagine that it could be done better because you would have already been doing it better if you had that imagination. But you get a coach like Scott that's like, hey, I see what you're doing there, and that's cool, but have you ever thought about this? And all of a sudden, your world explodes. I'll tell you a very personal, practical example of this. So I went and spent, this may sound like a lot or a little bit of money to some of you guys, but I went and spent $12,000 to buy into this group. And I was in there. It's a pretty high RPM community. And I'm sorry, my camera's dead. For some reason, the battery's not charging in it and it just died. So you can't see all my hand motions. And $12,000, joined this group. And there was a couple little distinctions that they made for me. And I was able to apply in my life. And I generated over $100,000 from that distinction within a month. Just that one aha moment where they were able to see something that I could not. You got time for a brief tangent as well?
Please.
Chris, did you have something burning to say, or can I tangentize?
No, when you're done, I'll chime in.
All right. I'm stealing Scott's screen here. How do I do this? There we go. So there's something out there called the Johari window. It's literally spelled Joe Hari because it was invented by two guys named Joe and Harry. I'm not making this up. You can go Google it. They won a freaking Nobel Peace Prize for what I'm about to share with you here. So if ever you wonder if there's still an opportunity for you to win a Nobel Peace Prize, then I would say there's still opportunity. But this is genius. And so this is a matrix. There's 4 quadrants in here. And there's things that I can see, and there's things that you can see. Sorry, I wrote that wrong. There's things I can see, and there's things that I don't see. Let's make this cleaner, because you are going to take a screenshot. This is going to be brilliant. I haven't done this in a while, so. There's things I can see, and there's things I can't see. And there's things that you can see, and then there's things that you can't see. And so these guys theorize that if there's something that I can see, and then there's something that you can see, that's called the arena. And the arena is where I can see something about myself, and you can, and somebody else sees something about myself, and we can all put it out there and we can talk about it. Then there's things, we'll change colors. Have you seen this before, Scott? Is this new to you?
Yes. You've actually gone through this privately one time. That's the reason this room goes. Yeah.
I have not seen this before.
Oh, okay. So there you go. Chris will be amazed. So if there's something that you can see, but I cannot see it, this is called the mask. And these are things that you keep hidden from me. So this is where you're telling me I'm average, or this is where you're telling me, hey, my trading's going great. But what I can't see is that you're actually slowly bleeding your cash. And you're believing the hallucination that a couple big win trades are overcoming the death of 1,000 cuts that you're experiencing. Then there's things that I can see. Let's actually go here first. There's things that I cannot see, and there's things that you can see. And I always forget what this is called. Maybe you can Google that fast for me, Scott, and figure out what this is called. It's called bad. It's not good if there's things that neither one of us can see. But where I'm going with this is where coaching becomes helpful, because there are things that I can see about Scott. There's things that I can see about Chris that they cannot see about themselves. And if I take a moment and I say, what if you looked at it from this perspective? And I bring my experiences and my knowledge to the table, and we start talking about that here, that's where we can move it up into the arena, and all of a sudden it becomes a possibility for you. And that's where I turned a $12,000 investment into a mastermind for myself, completely outside of stock trading. And I leveraged that within 30 days to $100,000 return for me. That's the benefit of getting a coach or a peer group, because there are things that they can see that you cannot see about yourself. And if they have the permission to speak that into your life, it can be life-changing. Did you figure out what this one is over here, Scott?
No, I was looking, but no, not yet.
It's bad. That's bad. And this is, I guess this is risk. You know, I'm making that up. I don't know if that's the official word, but if there's things neither one of us can see, that is where there's risk, and we need to work to manage that. point being is this is the quadrant that I want to talk about, where there's things you can't see, but there's things I can see. That could look like getting involved in the TSU Discord channel. That could look like getting involved in I guess we still have the Facebook group. It's there, it's never really taken off. It could look like getting involved in Traction. And then you've got a peer group and a mentor that can speak into your life. So, this is why we feel like it's so valuable for you to invest in those experiences.
Agreed. It
That's
makes
my
a
final
difference.
tangent.
Chris, you want to jump in?
Yes, but me jumping in is actually just going to be throwing it back to you, talking about the opportunities that are coming up for us. I was wondering if you could take a few minutes just to kind of briefly explain what the calendar ranges are, like what they mean, what people are looking at there, and why you're looking at those. I know you have an entire training on these, so I'm not asking you to go into it for like an hour, but if you can just give us a brief overview of kind of what you're looking at here. So
to open you guys up to what's potentially on the horizon here. So what's about to happen, and I'll just use the S&P since that's what most of you look at, is the calendar ranges, guys, are based off of, and this is what we've been talking about Traction. I mean, I've hammered them and some private clients I deal with, and this really hard. This happens twice a year. It's calendar based. There's nothing else that replicates this. You cannot do it with your MACD, your moving average. There's no way to do this. It's a range based on the calendar. So it only requires time and a price level to get to. The institutions use it. For all of you who know what the opening range is, right? You have a certain length of time, right? Take that length of time, divide it by 2. That's the amount of time you need to close outside the range. The institutions, for a long time, just to give you a concept of this, a really, really long time, have used this concept to establish, think of it like a zone, a range, a bull bear, but it happens every January and every July. So the first trading day of January and July, they're going to come in and they're going to take the first 10 trading days, not the first 10 calendar days, the first actual 10 trading days, and they're going to set the high and low of the range. And once they do, that range is good for the next 5.5 months to 18 months after that. So almost up to 2 years after that, it could have value. Now, if it was a valuable place clear in the past, you could look back at this and find levels through here, kind of like the COVID collapse on the top of this one. And I'm not trying to cherry pick this, guys. I've taught this since 2004, something I developed out. The neat thing about this is you can take those boxes and they create targets down or up, okay? Why do you care? Because I'm not setting that range and nobody in attendance here is setting this range. This is a lot of institutions. It works globally in every market, including crude oil, commodities, currencies, Forex, or I should say Bitcoin, whatever it is, it's going to work in every market. The reason you care about this is because these are the people with the money who were setting the range. These are the ones that move the market setting the range. The difference is we know this is coming. We know twice a year this is coming every single year. So if you know that and they're going to build the range, what happens is you will quite often see an expansive range just like this. Well, I don't know. Is this worth knowing? I don't know. That's 27.6 and that high was 42,000. They'll set them the first 10 days. Now, you don't just go blindly buy or sell tomorrow morning. But while you're all off enjoying the 4th of July for those in the U.S. and you're off catfishing or you're off, at the mountains or the lake or wherever you go, the ocean, whatever you're doing, deep sea fishing, right? Or sweating like me and Josh because we're in the southern U.S. and it's just hot as it can be. Mm-hmm. What's going to happen is you can enjoy 4th of July. The problem is the markets will be thin tomorrow. In fact, they've already turned thin about this time of the day because the holiday, long weekend. But the algos know this. And while you're off partying, having a good time, watching all the fireworks, starting tomorrow, they're going to start creeping stocks. And then in about 2 weeks, it'll be done. So here's what happens. You take next week off. You come back. Oh, I can't believe this particular stock's moved. Man, I got to get in. And you come in and buy it. Or you debate. And next week, I can't believe it's still going. Next thing you know, boom, it moves up. Oh, I got to get in now. You buy the top. They flip it back down. See what happened with Bitcoin right here? This happens quite often. They're building the range, and then they'll flip it over. It may go to the midpoint here. It may go all the way down to here. The reason you care about this is because it's not you or me that's studying this. And these ranges have worked for a stinking really long time. And you can just look at the charts here and you'll see them. Point I'm getting at. The market, if you go look at the S&P 500 now, unfortunately, we've done what we call step down. Notice past, year, we've been stepping up. We sold off starting when? The beginning of January. Then they built the range. Then they retested. They failed, came on down. Now we're under the range. I don't know if it's a tight range or a wide range. I don't really care. But once they set it, I've got places to work with. Now I understand for the next 5.5 months of this year, like I told you earlier, let's plan for the future. Now I can set that range. I've trained a lot of people on this over the years. In fact, this is the thing I've actually trained more people on than anything else in my lifetime. It's been widely attended in past years when I've taught this. I'm sharing it with you because I want you to have success. If you're an active day trader, it gives you levels. But the neat thing is for the next 2 weeks, I know there's going to be stocks that are going to be setting up, that are going to be creating opportunities either for longs or shorts out of this. And they will be hitting 1 or 2 or 3 R's. I might get a grand slam out of those moves before it's over with. So I'm watching specific stocks or certain sectors or where it might be. Is every stock going to have a great move in the next 2 weeks? No. I might get lucky and it turns into this like Goldman Sachs did over here and it doesn't break out for 4 months. But once it leaves that range, look what happened going higher. Same thing happened with US Steel. The thing is, the longer in the range doesn't break out, the more enticing it is for me. I have a scanner. That's why you see the radar screen on my left that looks for this exact information. This is telling me where I am inside that range. If you'll notice, there's a whole bunch of minus. What is this one? Micron has moved 6 deviations down. If you were measuring these boxes as targets down, that is 6 of those boxes down. That's like deviations. But when you get these ranges, they're there. And the pros, the institutions set this. We don't, but it is global. That's why I had conversations all week with different funds I deal with. Every year, they're prepared for this because they know what's coming. You as a retail trader, you can profit from this. If you don't want to trade the next couple of weeks and play in that zone, then once the range is set, just leave your horizontal lines on the screen. All you need is the high and low of literally through July 1st through the 15th. Whatever that range is, and it's set for July. Now go back and do January if you want to go back in time, but at least you'll know. And then if you're above the range or below, it can give you kind of sentiment of more of a bullish bias or higher bias, lowest bias. But to confirm, just raise clear. Opening ranges, if it's a 30-minute opening range, divide by 2, it takes 3 5-minute bars closing outside to confirm. If you're going to confirm this range, you're going to have to close 5 days outside of it. And here comes the, oh my gosh, I got to wait 15 days for it to set up. No, I didn't say you did. I'm trying to tell you what the institutions are doing because they're not in it for the next 20 seconds. If I've got somebody who's going to deploy, a few $100 million to a position, do you think they want to just scalp that or they're looking for a much bigger move? This is the reason when I asked Josh and Chris if we could talk about the next 6 months, I know we're, past time here, forgive me on that. It's because they are thinking about the second half of the year. Go look at your Amazon. Do you think it's going higher into Q4? Do you think Apple is? Or do you think they're going to wait till get through more carnage this quarter and then try to rally up into Q4 for the holiday season, depending on where the economy is? I'm trying to teach you to think beyond the next 20 seconds. I told Josh on the phone story. I'm trying to get you beyond the next 20 seconds to see the bigger moves because the institutions are not in it for the next 22 seconds. They are looking at bigger macro moves. And if they are, you can profit from that. And you can see that when things start to break down and then follow it down. Anyway, I hope that helps isolate that a little bit more for people. You want more about this, reach out, let us know. And then Traction officially launches tomorrow, and so does Traction Pro. If anybody's interested in that, if you're not involved with it already. And that's my 2 cents. And I'll hand it off to these guys, and then we'll get out of here.
Thanks, I know Josh. We're about done. Raymond asked a good question on the Zoom side. If calendar ranges are equally effective in bear markets as well, or if they lose some forecasting abilities.
Equally as effective. It just like an opening range is symmetrical. These are as well. In fact, this is, it's like cousin, so to speak, of the group. Like there's only difference is the length of time. It does not lose its effectiveness. And that's one of the reasons I have used this since, longer I've been teaching it. Since 2004, I've been teaching this. And so I don't see any degradation in it. The problem I think most people is they just want to, okay, so I just buy and sell it this way. Use this as a filter on your decisions. If a stock rips up 5 waves or 3 waves up and you can see it going back to where you know the range is, what do you think is going to happen there? You see where support was? My favorite of this, we call them pipe tops. If anybody knows what pipes are from Bukowski, is that right? Is that Bukowski? Right here, there's your pipes. Where'd it happen? It's not up at the highs up here. It's the January 10-day range. Where'd reversal from? Where the institution supported before they broke it. You can see this over and over and over again. So it has validity is my point bringing this up, no matter what the market conditions are. And I appreciate the question, Raymond. Does that help? Any other questions I missed? Sorry.
That was the only one I saw that was relevant to this topic. It's good. I love your calendar ranges. I love the way you look at the market. It's so unique but complementary to the way that I look at it. And I learned as much from you in these things. Wouldn't it be cool if you could like be a fly on the wall where Scott and Chris and I were just talking about trading and placing trades? That may be a hint that you should keep your eyes open on things to come. Anyway, I appreciate both of you gentlemen. I'm going to let you guys wrap up here, but I think it was a great session. I think it's a very timely thought, Scott, to take us in this direction. What have I done the last 6 months? What am I targeting for the next 6 months? If you need help, please reach out. We've got resources from free to not free. And by the way, my experience is the more you buy in, the deeper you buy in, the more expensive it gets, the higher caliber of the peers that are around you. It's just the way it is. Money separates, I guess. But we all started broke. We all started with zero. So we've got resources at every level. I will let the two of these guys wrap up. I'll just say my sincere hope that you guys are putting cash in your jeans consistently. I believe with all my heart, when good people have more money, they can do more good things. And we've got some exciting announcements. I hope. I'm a little premature in announcing anything in that arena, but we've got some big things that we want to do to just help people that are in need. And hopefully in the next few months, I'll be able to share a little bit more about that. But you guys go out and do your thing and, help somebody that's not got the same resources and opportunities that you do. And together we can make a difference in the world. Scott, I'll go to you. And then Chris, you can take us on home, friend.
Thanks. I appreciate you guys being here. Happy 4th of July. Enjoy it. And look forward to what's coming, guys. Lots of opportunity in the markets down the road. Okay. Have a great time. Thanks. Bye.
Thank you guys for joining us. If you enjoyed today's show, make sure to like the video and subscribe to the channel. We do this every week, so we'll be back next Thursday. We'll see you guys then. Take care.
See you guys.